Hi there, Shingirai here again with another update on portfolio performance over the past week. On a relatively risk-off 1 week, we saw portfolio returns range from CBAM 5 returning minus 0.98% down up to CBAM 1 returning 0.04%, where the defensive portfolio outperformed the more aggressive portfolio. Switching over to contributors to performance, we did see some recovery in European government bonds there of 1.58% performance on the back of some comments from the ECB Governor Madame Christine Lagarde, saying that whilst interest rate hikes are a virtual certainty going forward, there may be some slowdown in the rate of hiking versus the two past 75 basis point rate hikes at the last two ECB decisions, really giving some respite there for longer dated European government bonds. And we also saw the LNG UK 100 up 68 basis points on the back of some performance there for natural resources as well as commodities recovering somewhat on the week. But switching over onto detractor to performance, we did see those headwinds for European, Bailey Gifford European and Allianz Continental European, both down more than 4.8%, as yes, the ECB signaled yes further interest rate hikes and willing to send the economy into recession in order to bring inflation down, obviously affecting the deeper valuations for those European equities as reflected in performance there. We also begin to look at quarter-to-date numbers, where 9 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns on a risk-on quarter ranging from 2.94% for portfolio number 1 up to CBAM 5 returning 6.79% on a quarter-to-date basis. We did see significant recovery, as we've been highlighting the past couple of weeks, from Allianz Continental European and Bailey Gifford European Equity, which had been sharply derated earlier in the year. And we did begin to see a bit of recovery there for European equity, initially on their optimism around China reopening and stronger than expected earnings as well, being the narrative coming into the new quarter. And we did see that persisting since the 30th of September and up more than 13% for our European equity positions there. And some relief returning to UK markets, where we saw that domestic economy potentially coming back online and investors again beginning to look at the UK domestic market and seeing that return of 14% for the FTSE 250 positions. But switching over again to China, we've been highlighting a couple of issues there and headwinds. Despite that quarter-to-date number improving somewhat, we do still continue to see areas in China going into hard lockdowns, and that would see our Chinese equity positions down more than 3.9% coming into the quarter, and some contagion effect obviously in the shorter term with European equities, for which Europe is the largest. Europe's largest trading partner would be China, and that story really beginning to overflow with the rolling lockdowns, and that would see Columbia Threadneedle and HSBC down on the quarter-to-date basis.